just big picture in terms of what this means for WeWork or how we got here. What's your reaction to the filing this week?
Sure. Well, it's a very interesting story, and a lot of people have fictionalized this, and there's a lot of movies out there. So there's a lot of discussion about how this actually happened and how we got to where we are today. But I think if we take a look at what the most recent developments are, sort of the documents that have just come out around bankruptcy, what do they tell us about WeWork? And what they tell us is that, despite all the hype early on in 2016, 2017, WeWork is really just a real estate leasing company. I mean, that's the business model. And they really are sort of overextended in being able to sort of execute that model very well. I mean, we're looking at, as you mentioned, a company that was once valued at about, $47 billion, and today is worth maybe 50 million. So this is a company that just really never had a business model that met the overhyped expectations that were placed on it. So I think today we're going to see, in the next couple of years, we're going to see, does this business model really work? Obviously at a much lower valuation, maybe a $3 or $4 billion valuation versus the sky high valuation that people were thinking, 5-6 years ago. So I think that's the story that we're going to be looking at moving forward is, was there anything to the hype at all?
To what extent is it also a byproduct of the shift that we've seen in the amount of virtual employees and people who are leisure travelers or would rather work from the beach than from a WeWork or a Notel or any of the instances where, you might have great connectivity, but do you have sand? Can you, get it in between your toes? Probably not.
Well, they didn't have sand, but I do understand that they had beer there, so that was also, kind of attractive to, I think, a lot of workers. But what we think is that the pandemic surely had some impact on this, and so does the sort of the slow walking back, the return to office, which has just never really caught on like people had hoped in terms of bringing people back to the office. So WeWork is definitely suffering from that. And the other, I think, question really around this is just how big is the market for people that want flexible workspace? And I think there's also sort of a limit to the number of people that are going to be working in this kind of environment. And that's really what WeWork really needs to figure out is, this isn't sort of a limitless business in terms of the potential customers. There's a limit to this, and this is what they're going to find out. The other challenge, of course, right now is that real estate, particularly business real estate, office leasing, has become very complicated, right? Occupancy levels are down, prices are down, valuations are down. Companies, banks, they're just walking away from real estate projects because they can't get tenants. And so WeWork is kind of caught up in that. And, they've been trying to renegotiate a lot of these longer term contracts that they had with real estate firms. But they apparently weren't very successful, or they wouldn't be, declaring bankruptcy. And, it's interesting, if you look at some of the numbers, they're losing about $500 million a year last year, about, $500 million. They only have about $200 million in cash. So, they were very quickly going to run into a situation where they just weren't going to be able to pay their debtors. So there really weren't a whole lot of other options than bankruptcy right now.
So, Chris, what is this then? How much of this is a WeWork specific problem versus maybe the fact that this could signal more distress that we could potentially see within the commercial real estate sector?
Well, I think we're seeing that distress now. And, as these companies go to renegotiate leases, I think we're going to see more of this. There is a lot of concern. There's all kinds of talk about how maybe we can convert these buildings to housing, but that's difficult for a variety of reasons, whether it be local regulations or the sort of setup of the building. Now, WeWork had a kind of special place in the hierarchy, if you will, of office leasing. They kind of took this sort of second tier space that kind of had the vibe that WeWork was looking for. So, they're in a place that's even more dire, in fact, than some of the higher end office spaces, which is what people are really wanting to move to. So I think this is an example of what's to come, and, in terms of the real estate market. But I also think it has this broader thing that it reflects, right? It reflects this sort of overly optimistic expectations that people had kind of going into the pandemic, again, 2017, 2018, about, the value of these companies. And we can go and look at some of the recent bankruptcies, some of the recent even criminal trials. Now, I don't think there's anything criminal going on at WeWork, But I think it's also representative of this kind of overly optimistic situation with these companies that were just kind of poorly managed, right? I mean, if we look at FTX and we look at Theranos, I mean, these were companies that potentially could have done really interesting things, but they were just so poorly managed. They didn't sort of have standard accounting practices. They didn't have legal advice that was helpful. And I think that was also true at WeWork, and one of the reasons when they tried to go public a couple of years ago, back in 2017, people looked at the financial statements and they looked at what was going on in the company and they said, we really can't take this public. There's just too much that's going to raise too many questions. Now, luckily, at that time, SoftBank came in and bailed them out. So there was this sense that
right.
How are we going to deal with this? So they got this cash infusion. So I do think it's representative of this larger problem of overvaluations.
Yeah. If only some of that real estate was to be converted into residential or apartments. If there was something like a WeLive, I don't know. Thanks for joining us, Christopher Hayes, who is the George Washington University School of Business professor and management. Thanks so much for joining us.
Thank you for having me.